are going for the secret number one. And what is the secret number one? Secret number one is, what is that ideal time to buy in the stock market? What is that ideal time to invest? Now, if I ask you what is the ideal time to invest, you'll probably say that the ideal time to invest is when the price is low. And that's the right answer. You invest when the price is low. You buy low and you sell high. But if you dig deeper and understand when would the price be low, you'll understand why people struggle in the stock market. So the price would be low when majority is into selling. So majority is selling, price is low, and as a human being, we want to do what the majority is doing. We feel comfortable doing what the majority is doing. So going against the majority, because when everyone is selling, price is low and we start buying, that's like going against the majority. And we feel uncomfortable when we go against the majority. So everyone is selling, price is low, but we'll struggle to buy because that's an uncomfortable decision. And our mind doesn't really want us to be uncomfortable. It doesn't really want us to move out of the bed too much, not to go out for that exercise or that run because that is uncomfortable. Making a buying decision when everyone is selling is uncomfortable too. So we'll always struggle. Now, how do we overcome this? Because we'll always have this bias to be with the majority and we'll always struggle to make that decision to buy low because everyone is selling. So how can we overcome this? We can overcome this if we have a system in place because the system will not have any emotions. And if you mix money and emotions, then there's a big chance that you might not be able to take the right decision. So what you need to do is you need to follow a system, and this system will help us take the right kind of decision because it is unemotional. Now, what kind of a system am I talking about? I'm talking about these four economic cycles. An economy goes through these four economic cycles all the time. At any part of the time, economy will be going through one of the economic cycle. So you got recovery, boom, slowdown, recession, and it's cyclical. So after recovery comes boom, then slowdown, then recession, then again recovery, and this continues, right? Now, if you just understand the characteristics of each economic cycle, then you'll be able to know which economic cycle we are currently going through and what is it that we need to buy and what can we expect. For example, if we are going through a recession right now, if we're going through a recession right now, what can we expect in the future? Just type this in. What can we expect in the future? So JSV, you're saying that the PPT is not available. Probably you'll have to zoom out a bit. You're zoomed in too much. Okay. Yeah. So you can expect recovery? Absolutely. Absolutely. Now, what do people think? When times are bad, people think that this bad time will just continue forever. They don't realize that market moves in cycle, economy moves in cycles. So after recession, recovery would come. Similarly, in the boom phase, when things are booming, looking great, what can we expect in the future? A slowdown, a downtrend. But what do people think? They think that good times will last forever. That's what they think, right? But knowing about these four economic cycles will totally reshape the way you think about the stock market because this will give you a clear idea as to what the market is doing and what is it that you can expect. Now, I've been teaching the same principles in ICICI, National Stock Exchange, and it's helping thousands of traders and investors. It's going to help you too. Yeah. All right. Awesome. So let's carry on and start off with the recovery phase. Okay. Now, before I start off with the recovery phase, I just want to make sure that you're with me right now. Okay. So just type with you in the comment box if you're still with me. Just type with you in the comment box. So Amit is asking me, how do you know you're in recession and recovery? That's what we are here to learn, Amit. Okay. That's what we'll be learning. And we would be learning which phase are we going through currently. Okay. All that we'll be learning today. Okay. Awesome. So yeah, so Sahil is saying, can I record this? Sahil, I won't be able to record and send this, recording to you because, these are the same things that I discuss in ICICI and NSE. I won't be able to share the PPT or the recording with you. Okay. Now let's start with the recovery phase, and these are the characteristics that we'll see in the recovery phase. Now in the recovery phase, we'll have wall of worry. Now, what do I mean by wall of worry? Wall of worry is people would be worried about, their future. They'll be worried about their kids' future, and things will not be very nice. Now, why would this be the case? Because see, the prior economic cycle was recession. And in recession, things are bad. People are living a tough life. They don't have enough money or resources, and they're struggling. People are losing jobs. There is unemployment all around, and nothing looks good. But at the same time, we'll see some subtle changes in the economy, which would suggest that better time is about to come, and we are entering that recovery phase. But people are living a difficult life. They're living a hard life, and they won't be able to you know see these subtle changes because their life is still hard, and they're looking at everything from a close distance, so they're not able to see these subtle changes. So people are living a hard life. They're not too happy with the kind of decisions that the government is taking, and at the same time, you would observe that RBI will start to cut the interest rate. RBI will cut the interest rate, and when interest rate go down, what happens? When interest rate go down, what happens? Loan becomes inexpensive. Loan becomes cheaper. It's easy to take loan now. People start taking loan. They start spending money, and when people spend, companies are able to sell more. Their profit go up. Their sale go up. As a result, their stock price start to go up as well. So you have a scenario right now where RBI is cutting the interest rate, and share market is steadily rising. And at the same time, we'll observe rising economic resources like land, labor, capital, entrepreneurship would be on an upward swing. And if you happen to observe this, then it's a sweet spot to buy equities, and one should be buying equities at this point of time. And since interest rate will be falling, Rishi is saying what would be the impact on bonds? Well, interest rates are falling and the bond price will be going up. So yeah, investment into the bonds would also make sense. But we are talking about stock market right now, so this is a good time to buy stocks right now. Now, what to buy? That's another question that we need to answer. What to buy? This is what we'll do. We'll buy mid and small cap stock and value stock. Now, value stock is value investing, where you're judging the value of the entire company, comparing it with the current market price, and if it's undervalued, you'll buy. If it's overvalued, you'll ignore it. So value investing is all about finding out those undervalued stock. If something is undervalued, you'll buy it. That makes sense, right? You'll buy something which is undervalued, and you won't buy something which is overvalued. That's what the value investing is all about. It's something which Warren Buffett has been doing successfully for the last 5 decades, and it's something which involves a different kind of a skill set, because you're judging the value of the entire company, and a company has too many moving parts to it. The other thing that you can be doing is you can be buying mid and small cap stocks. So mid and small cap stocks are those medium-sized, small-sized companies, not really the big companies. And the definition here is the market cap. Market cap, if a company has a market cap of above 25,000 crore, it's a big company, a large company. Anything below 25,000 crore is a mid and small cap company, right? So we can be doing this in the recovery phase, buying mid and small cap. Now here, I like to tell you that I'm not much of a fan of a mid and small cap company. I like to invest more of my money in large caps. But if you're someone who like to invest in mid and small cap, recovery phase is a good time for you to invest. And then after the recovery phase comes the boom phase. And this is where things are booming. Everything is looking good. Economy is doing exceptionally well, and things would be looking good, right? So just type boom, boom in the comment box. Type in boom, boom in the comment box, because this is where things are looking great. Awesome. Yeah, just type boom, boom in the comment box. So this is what we'll observe in the boom phase. You'll have rising overseas reserves, easier money. So RBI was cutting the interest rate, RBI is still cutting the interest rate, and you have low interest rate scenario. People are easily taking loans, spending money. Companies are able to sell more. Everyone is thriving. People have jobs, so they have their salary. They're spending that. They're taking loan and spending even more money. Consumption in the economy will go up. Even real estate will do well, because people will take loan and buy a house of their own. Instead of paying rent, they'll pay EMI and own a house. So everything would look good. There'll be no or very little negative news around. You'll have positive news all around, and there'll be euphoria about economy and the stock market. And if you happen to observe this, it's a bull run, and the market is expected to do really well, right? And what do we do? What do we do right now? In the boom phase, what to buy? This is what we'll do. We would buy cyclical stocks. Now, cyclical stock, as the name suggests, they are cyclical in nature. They would do well when economy is doing well, and they'll do poorly when economy is doing poorly. So economy is doing well right now. People have money to spend, and if people have money to spend, where would people spend that money? People will splurge money on electronics. They'll be taking loan and buying a car or two-wheeler. So auto sector will do well. Real estate will do well. People will be consuming more. So FMCG sector will do well. People will travel. So airline stocks. You'll have hotel sectors doing well. Metal sectors doing well because it's a cyclical sector. So all these sectors will do well. Infrastructure will have an uptake because, economy is booming. Infrastructure stocks will also be doing well. Housing stocks will be doing well. All these, tile stocks, all these stocks will be doing well because, these stocks will do well when people have money to spend. And in the boom phase, people have money to spend. They can take loan and spend money. Consumption will be going up. So these are the kind of stocks that we can invest into. And then comes the slowdown phase. And in the slowdown phase, the downtrend begins. This is where the party ends and the downtrend begins, right? And what are the characteristics that we'll see now? In the slowdown phase, this is what we'll observe. So we'll have rising interest rate. Interest rate will now start to go up. RBI will start to increase the interest rate. Now, why would RBI do that? Why would RBI increase the interest rate? Well, because of all that buying in the previous phases, because of all that buying, the demand will go up, and as a result, the price will start to go up. Inflation will start to go up, and RBI doesn't want too much of inflation. So it'll start to increase the interest rate. And what happens when interest rate go up? When interest rate go up, loan becomes expensive. Not many people will come forward to take loan now. And spending in the economy will go down because not many people are taking loan and spending money now. And because the spending has gone down, companies will not be able to sell as much. Their sale will start to plummet and share price will start to go down. So you have a scenario now where interest rates are rising, stock market is falling, and you have falling resources like land, labor, capital, entrepreneurship. Everything would be on a downward spiral. And if you happen to observe this, then it's a downtrend that we are in. It's a downtrend that we are in. And what should we do with our long-term portfolio? Should we sell it? Should we sell our long-term portfolio? And remember, we earn a regular income on the portfolio that we have. So should we sell it? It's just like, I'll give you an example. Let's say you have a house on rent, which is giving you a regular income. Would you be selling that house in case if the value, let's say, drops down from 1.25 crores to 90 lakhs, and you're getting a regular income out of it, right? Would you sell it? If you would sell it, just type sell, or would you be interested in the regular income? If you would be interested in the regular income, just type RI. RI is for regular income. Yeah, so I see all of you are typing in RI. Okay, yes, yeah. So of course, if the value has gone down a bit, we would not be worried because we know that in about 4, 5, 7 years, the value of the house will go up and we'll keep receiving this regular income. Similarly, we earn a regular income on the portfolio that we have and we'll not look to sell it. We'll continue to earn this regular income and we would hedge the portfolio. Now, hedging of the portfolio is protecting the value of the portfolio. Just like insurance. When we have a car insurance, if something happens, we get reimbursed. Similarly, we can have a kind of an insurance for our portfolio. This is done through future and option, FNO. And our position in FNO, future and option, will be able to give us some protection in the cash market, wherein when the market starts to go down, our stock portfolio will go down, but we would be able to offset those losses because of this position. It's something that you can learn. And it is something that you must learn. It's not rocket science. You must learn how to protect the value of your portfolio. You must learn how to earn a regular income on the portfolio. It's something that you can learn. It's not rocket science at all. And something that you must learn because even if the market is doing well right now, one thing is for sure, we'll have downtrends in the future as well, right? And you need to know how to protect the value of the portfolio, right? Something that you can learn. So this is what we'll do. We'll protect the value of our portfolio through hedging. And what do we do in the slowdown phase? What to buy? So in the slowdown phase, this is what we'll buy because we'll still be getting money. Our portfolio is hedged. the new money that's coming in, our salary, our business income, what do we do with it? This is what we'll do. We would buy short-term government bonds and short-term debt mutual funds. This is where our money would be going. So just as a rule of thumb, I'm just trying to make it really simple. As a rule of thumb, when you expect the interest rate to go up, you should be buying the short-term debt funds, debt mutual funds. And when you expect interest rates to go down, it makes sense to buy long-term debt mutual funds. And just to make it really simple, just to avoid any complication, even if you just stick with short-term debt fund all the time, whether interest rates are going up or down, it doesn't matter. It'll be okay, right? You can just stick to short-term debt mutual funds and that'll be just fine. Okay, awesome. Yeah. And then comes recession. Yeah. So Raja, you missed the slide. Don't worry. I'll show it to you in the end. Okay, don't worry. Okay, Raja, stick around. I'll show you the end. Okay. Now, then comes the recession phase. After the slowdown phase, the things take turn for an even uglier phase and we enter the recession. And in recession, things are bad. What is the definition of recession? When we have 2 consecutive quarters of negative growth, that's when we have entered into a recession. When we have 2 consecutive quarters of negative growth, and India has had 2 consecutive quarters of negative growth. What are the characteristics that we'll see in the recession phase? This is what we'll see: rising overseas reserves, rising unemployment, prevailing high interest rate. Now, this slowdown, this recession has been brought upon us by this pandemic. And things are a little different because it's not normal. It's because of the pandemic, this slowdown, this recession. Now, at the depth of recession, and what do I mean by depth of recession? Right at the bottom, before it starts to go up again, right at the bottom, what we'll observe is that RBI will start to cut the interest rate. RBI will start to cut the interest rate. And why would RBI do that? Because RBI would want to revive the economy. And how can it do that? By cutting the interest rate, loan becomes inexpensive. People start taking loan, start spending money. Demand picks up, money exchanges hands, circulation of money, all that happens, right? Because of interest rate going down. RBI will start to cut the interest rate, hoping that people will come out and take loan and start spending money. And if you remember, on March 27th, we had RBI cutting the interest rate by 75 basis point, 0.75%. And after that, they had cut the interest rate by 40 basis point, 0.40%. And they're doing it so that people take loans, start spending money, and the demand picks up. Because unless demand picks up, economy can never start to function normally. And they started to cut the interest rate on March 27th at the depth of recession. And the next day, see, they cut the interest rate on March 27th by 75 basis point, 0.75%. The next day, the market, where did the market close? The next day, market closed on 28th. The market closed on, around 8,200 levels. Around 8,200 levels. And today, we are at 14,450 odd levels. Around 14,500 levels. And interest rates started to go down in the month of March, on March 27th, and the market closed at around 8,200 levels on the next day. And the market has gone up by close to 80% from those levels, close to 80%. And we got this clue on March 27th. Now, do you remember what was happening during that time? We had recently gone in a lockdown. Things looked terrible. We had no answer to this virus. April looked worse. We dreaded going out of the house. Do you remember that feeling that you used to get when you used to step out of the house? Do you remember that? Nobody was on the road. We couldn't see anybody. All the doors were locked. We couldn't hear anybody. It looked terrible. It looked terrible, and we thought that it's the end of the world. Do you remember that feeling that you used to get when you used to step out of the house? Do you remember that? If you remember that feeling, just type, "Oh God," in the comment box. Just type, "Oh God," in the comment box. We had gone into the lockdown. It looked that the world is coming to an end, and that is it. That is it. Just type, "Oh God," in the comment box. It felt terrible. We feared for our lives. We feared for our loved ones. And we thought that this is it and we're going to die now, right? Now, if we are thinking about the world is coming to an end, who will think about investing in the stock market? Who will think about investing in the stock market? Who will think about it? Well, we will, because we have a system. And what is that system telling us? That system is telling us that when interest rates start to go down, that's the depth, that's the bottom. And that's when we'll start to go back in. We'll start to go back in the stock market, start investing, right? And this clue came to us when the market was closer to 8,000 levels. And we are at 14,500 odd levels now. Imagine that, right? There'll be gloom and darkness all around. Nothing would look good. March, you remember that time, nothing looked good. Future looked bad. But we had that clue and we should have gotten in. And I'm not talking about a small little SIP investment that everyone is doing 15, 20,000 rupees. Even if you invested, let's say 15,000 rupees, it probably is now, 25, 26,000 rupees. It would hardly make any difference to your net worth. I'm talking about a big chunk of investment that can actually make a difference to your net worth. That's the kind of investment that I'm talking about, right? There'll be gloom and darkness all around, but that's the time to get in. Now, what do you think the retail investors, what do they do? A normal Indian investors, what do? They would be interested in the stock market when things are good. They would wait for things to get better. They would wait for economy to improve, GDP numbers to improve, better times. They wait for companies to report in good numbers, and then they would start to get in. They would wait for good things, and then they start to get in. Now, tell me one thing. If everything is good in the economy, everything is looking great, would the price be low or would it be high? Just type this in. Would it be low or would it be high? If everything is good in the economy, would the price be low or would it be high? So Mukhtar is saying hi, Devesh is saying hi, Naresh is saying hi, Deep is saying hi, Soumya is saying hi, Ahmed, Anurag, everybody is saying hi. Absolutely. Parimala is saying hi, Aparna is saying hi. Absolutely. Pavan is saying stable. Okay. Well, if everything is looking good, the price would be high. Compared to March, Pavan, it'll be high, right? Of course, right? So this is what you need to do. We need to get in when the time is right. And people wait for good things to happen and then they like to enter. And at that point of time, the price is high. The price is high. So what do you think people end up doing? They end up buying high and selling low. They end up doing the opposite. Instead of buying low and selling high, they end up doing the opposite. And they end up buying high and selling low. It brings me to an example. Our CA, our chartered accountant, when he got to know what we are into, that we are in the stock market, he started sharing his story that every time he has invested, he has lost money. The first time he invested was in 1992 when we had that Harshad Mehta scam and he lost money. Then he again invested in the year 2000 where we had that dot-com bust and the poor chap again lost money. And then he again gathered courage to invest in the year 2008 when things looked great. GDP numbers, if you remember, were rocking. Economy was doing good. And he invested his money and we had that global financial meltdown and he again lost money. Every time he invested was the time when the price was high. Now we tend to think that CAs have excellent knowledge when it comes to stock market. The truth is that they have excellent knowledge when it comes to taxation. But when it comes to stock market, they're as good as anyone. Anyone who's willing to learn here will do an absolutely brilliant job of building wealth. Anyone who's willing to learn, be it a CA, be it an engineer, a doctor, a working professional, a businessman, anybody who's willing to learn will do an absolutely smashing job of making money here. Anybody who's willing to learn, right? So things are not looking good in the recession phase, but that's the time for us to get in because we would be able to buy low, right? That's what we need to do, right? Now, if you look at what happened in March, okay, if I just talk about what happened in March, coronavirus cases were going up and the market was also going up. Imagine 20,000 cases, 30,000 cases, 50,000 every day, but the market was going up. From 7,500, it has now come to 14,000 level. We had that India-China border tension. It was all in the news. And then now, if you look at now, It's so different, right? When we were in March, market was going up. We had no answer. We had no vaccine, no nothing. We had that border tension as well. And now things look great. We have the vaccination. There is no India-China border tension, at least not in the media. And now what do you think the market would do? What do you think the market will do now? People are now getting interested. They're feeling safe to enter the market. Do you think the market will give them any returns? They're entering at a high price. And it's not the time to enter the market. If you have not invested all this while, when the price was so low, there's no reason for you to invest now. Wait for a better time. But if you're someone who's been investing all this while, I think you should continue. But getting in now because things look good is not really the right answer. Okay. So in the recession phase, what do we do now? What to buy in the recession phase? This is what we'll do. We'll buy growth stock, rate sensitive sector, and corporate bonds. Now, corporate bonds are fixed income instrument. They'll be able to offer 8, 9, 10% kind of return, which is pretty good for a fixed income instrument, which is just like fixed deposit. Okay. Now, as far as the stock market is concerned, we would invest our money in growth stock. Growth stocks are the market leaders. They're the leader of their sector or the industry. Rate sensitive sectors are those sectors which go up and down because of the change in the interest rate. Right now in the recession phase, interest rates are expected to be low. And if interest rates are expected to be low, which sectors do you think can benefit? Which sectors would benefit? Real estate will benefit. You'll have a banking sector benefiting because people will take loan and they'll be taking loan from the banking sector or the financial sector. Auto sector will benefit, of course, yes. You have infrastructure. All these sectors would benefit because interest rates are low, right? So these are some of the companies that we can look to invest into. Now, growth stock, there's a question here about growth stock. Some examples. Now, you'll be able to come up with an example. Growth stocks, as I said, they are the market leaders. They're the leader of their sector or the industry. And, if I ask you who is the leader in the banking sector, what name would you type here? Who's the leader in the banking sector? Yeah, Amit, you're the first one to type. So SBI, HDFC, yes. Kotak, ICICI, absolutely. If I ask you who is the leader in the IT sector, IT space, who's the leader in the IT space? Yeah, Sagar, you're saying TCS, absolutely. Infosys, TCS, these are the market leaders, and we should be sticking with the leaders in case of a recession. Now, an all-time, an all-time important question: which phase are we in right now? What do you think we are in right now? Which phase do you think we are in right now? Yeah. Some of you are typing boom. Some of you are typing recovery, slowdown. I like to believe that we are in the boom phase. We are in the boom phase right now because things have been doing really well. We have come a long way from where we were in the month of March, and things are looking great. And what they're saying, vaccine is here. Yes. We are in that boom phase, and what can you expect after boom? What can you expect after boom? You can expect a slowdown, right? So if you have not been investing all this while, there is no reason for you to now jump in. No reason at all. Wait for a better time. I'm not saying that we are jumping into slowdown next. No, we'll probably be better off by investing at a lower level, right? We'll get those chances, but right now it doesn't. You don't have to invest right now, okay? So we are in that boom phase right now. Things look great. And, just by structuring your thinking like this, if you just segment the market this way, you will be able to, come to know what phase we are going through and what is it that we need to do and what is it that we can expect. This will give you a clear answer as to what you can do. People have no clue at all as to what's happening and what to do in the stock market. They're clueless. By just segmenting the market this way, you will always have an idea as to what the market is doing and what is it that you need to do. As I said, I've been teaching the same principles in ICICI and NSE, and it's helping thousands of traders and investors become independent, because this would really help you. Okay, this would really help you. Okay, Ankit, I'll answer the questions in the end. Don't worry. Yeah, I'll answer the questions in the end. So, if you just segment the market this way, this would really help you. And let's say, let me ask you, did you find this useful? because this would really help you. If you found this useful, just type useful in the comment box, because this would really help you. It'll make you independent. Just knowing this much will make you independent, because now you know if it's a good time, you should also be on a lookout for a slowdown. Look out for those signals, and we need to hedge the portfolio, protect the value of the portfolio, all that. Yeah, we can do that. Absolutely. Yeah. Awesome.